Today, Circle resumes its post-IPO rally, a federal judge pushes back on a settlement between the SEC and Ripple, and Zach Abrams, co-founder of Bridge, discusses the wave of stablecoin interest on Wall Street. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies in the green, along with stocks, as the S&P 500 continued its march toward the all-time high set earlier in the year. Some factors for the rise include the potential for lower interest rates later this year, a calming tariff environment, and what seems like easing tensions in the Middle East. As of noon Eastern, Bitcoin climbed slightly, trading above $107,000 for a second straight day. Ether rose more than 1%, holding above $2,400. Solana's Sol token, however, dropped by 0.5%, even after Invesco and Galaxy joined the growing pool of asset managers trying to issue a spot Solana ETF by filing an application with the SEC yesterday. Now, taking a quick look at some crypto-related stocks, eToro shares climbed 1.5% as of noon after the retail trading platform announced today that it was expanding its crypto lineup for U.S. users once again, with the addition of 34 more crypto assets. In total, eToro users in the U.S. can now trade more than 50 different cryptocurrencies on the platform. Turning to Circle, after a brief pullback this week, the stablecoin issuer resumed its post-IPO rally this morning, soaring nearly 11% as of noon. Shares have rocketed more than 600% since its debut on the New York Stock Exchange earlier this month. As we take a look at today's top stories, we begin with an update to the proposed settlement from Ripple and the SEC. Today, a federal judge rejected the joint motion to reduce Ripple's fine to $50 million and settle the civil lawsuit over the alleged sale of unregistered securities. In this filing today, federal judge for the U.S. Southern District of New York, Annalisa Torres, pushed back on the idea that both parties had the authority to reach the settlement. Now, back in 2023, Torres ruled that while Ripple's native token XRP did not meet the legal definition of a security, XRP sales to institutional investors should have complied with securities laws. The firm and the SEC appealed, but agreed to settle if the judge set aside her injunction and approved lowering the $125 million fine she imposed on Ripple last year. Ripple's chief legal officer, Stu Alderoty, posted on X this morning, writing that now the ball is back in the company's court. He added that the court gave the firm two options: dismiss its appeal challenging the finding on institutional sales, or move forward with the appeal. Alderoty stressed that either way, XRP's legal status as a non-security hasn't changed. We also reached out to the SEC, and the agency declined to comment. Next, the Trump administration is working to let homebuyers include their crypto in federal mortgage applications. The Federal Housing Finance Agency issued a directive to the two mortgage enterprises known as Fannie Mae and Freddie Mac to formally count cryptocurrencies as an asset when doing risk assessments on single-family loan applications. Now, we told you yesterday that the agency's director, William Pulte, said in a post on X Monday that it will study the usage of cryptocurrency holdings for those looking to qualify for mortgages. Finally, Wall Street's embrace of tokenization keeps building. New York-based investment startup Republic will allow users to buy tokens that represent private companies like SpaceX, OpenAI, and Anthropic. Republic will offer these tokens for a minimum of only $50, lower than the roughly $10,000 required for typical investing in private companies. Now, this comes as the crypto industry awaits market structure rules from Congress. Both the Senate and the House have bills under consideration. All right, focusing on stablecoins for our main story. With the Senate advancing the Genius Act regulation bill last week, these tokens have been front and center. Crypto World's Mackenzie Segallo spoke with Zach Abrams, the co-founder and CEO of Bridge, which is building infrastructure to support stablecoin payments. The two discussed the recent regulatory development and why financial infrastructure platform Stripe, which acquired Bridge, is embracing stablecoins.
So just the last few days, we've seen a flurry of stablecoin announcements, from Fiserv's launch of BuyUSD to MasterCard expanding support for tokenized dollars. How disruptive is this really?
Well, we think that stablecoins are an entirely new money movement platform. Cards were this whole new money movement platform that were created many decades ago, and they've created trillions of new economic value. And we think that stablecoins will do the same. It's this new tokenized form of money. And with it, you can move money globally. You can create entirely new financial products. It changes the underlying economics of money movement in many ways. So we think it's going to be a very big change that will play out over the next many years.
And why are these TradFi corporations launching their own tokens? What's the benefit for them?
First, with regulatory clarity, there is now the opportunity to participate in these markets. And the stablecoin market has sort of emerged over the last, decade, little less than a decade, to be, around $400 billion in market cap. Most banks think that it will get to a couple $1 trillion in market cap. And so, and today that market is entirely served by more or less two entities, Tether and Circle. And there's a very meaningful role to play for, the Fiservs of the world, the local banks of the world, and, the large global banks like the JP Morgans and the Bank of Americas. And if we are to get to a couple $1 trillion in market cap, a huge percentage of that will likely be served from a lot of the existing financial institutions.
Now, what materially changes in the financial stack when stablecoins are used instead of traditional payment rails?
We see stablecoins working in two ways. The first is when money needs to move across borders, or money needs to move instantly in some capacity. So, and we see this in every way, shape, and form. So we see Scale.ai uses us to pay out, data labelers all over the world. So Scale sends us dollars, we convert to stablecoins and send those stablecoins out all across the world. We see SpaceX using us. They sell Starlink all over the world. They're collecting local payments in local currency. They convert that local currency into stablecoins and bring it back to the US. And we see other folks like remote.com paying out gig workers via stablecoins. And we see folks like Bitso taking Mexican pesos, converting them in stablecoins, and then settling them into euros. So you go fiat to fiat with stablecoin as the transmission rail. Every way, shape, and form that money can move internationally with stablecoins, we see it. And the benefits are that it's way cheaper and a lot faster in many cases. The second use case is that stablecoins represent the first global financial building block. So before stablecoins, you would build on a US banking stack to serve US consumers and a European banking stack to serve European consumers. It made international expansion very challenging. And so now you can build on top of stablecoins a stored balance, a card product that can serve people all over the world. And so we see a number of financial institutions building on top of stablecoins to serve new markets that they couldn't otherwise reach.
What portion of Stripe's payment volume is currently in stablecoins, and how fast is that growing? I'm also curious where you expect it to be in a year from now.
I think that our belief is that most transactions, most fintechs, most transactions will end up moving over stablecoin rails over the coming years. In many ways, we have not been as, the market has surprised us in how quickly stablecoin adoption has come around, especially in the last 6 months. But we think that there is, financial markets tend to be rational over the arc of time. And it is very rational for businesses to build with stablecoins and more financial transactions to settle with stablecoins. And so we think a very large portion of Stripe's internal money movement will ultimately transition to stablecoin rails. And we think the same thing will transpire across all the US economy and, a large swath of the global economy.
So within stablecoin usage across Stripe's network, where is it coming from? Is it mostly global merchants at this point, platforms in emerging markets, or just crypto native businesses generally?
It is overwhelmingly businesses who have been outside the US who are either they're money movement businesses paying people all over the world, or they are entrepreneurs starting new financial services companies, or they're folks who want to offer financial products in new markets. That's like the largest swath of customers. So a great example is Felix Pago. They are the fastest growing remittances company between the US and Mexico. They use stablecoins to facilitate all of these cross-border transactions, but consumers don't know. A consumer sends US dollars and then Mexican pesos land wherever they need to land in Mexico, but the dollars move into a stable coin to traverse between the US and Mexico. Felix Pago uses Stripe to collect card payments and settle in dollars, converts into stablecoins, and settles down into Mexican pesos. They started maybe 4 years ago. And because they were starting and competing in a very competitive corridor, they wanted to use stablecoins because they enabled them to compete on speed and price with the biggest cross-border payments companies in the world. It's a great example of the entrepreneurs and the global businesses that are now coming and looking to stablecoins to to help them compete, to help them win.
So Stripe acquired Bridge last year to accelerate stablecoin integration. What did Bridge bring to the table that Stripe didn't already have?
Well, we started 3 years ago. We had been building APIs specifically focused on stablecoin money movement. Our belief was that stablecoins would be a core global payment rail. And so from the very beginning, we focused on acquiring the licenses and building all the regulatory infrastructure to serve the world with stablecoins, and then building the technical infrastructure to be able to move stablecoins, between any stablecoin on any blockchain and settle down into the fiat currencies that people desire. And so we really were the first company to build payment scale APIs to be able to move money via stablecoins and across blockchains. And to give a quick example, one of our first customers was, running a government aid program where every week we would pay out tens of thousands of different people across the world, oftentimes in very small amounts of money. Doing that via fiat rails is, there's been a lot of infrastructure that has been built up to make that feel fast, even though it's not fast. But with stablecoins, there had been no company before that had built the infrastructure to send tens of thousands of different payments via stablecoins on blockchains all at the same time and have them land in wallets very reliably. And so we built infrastructure that has very high SLAs that can serve, government entities down to fintechs and enable all of them to very easily adopt and use stablecoins.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.